Test. 1, 2, 3. What's going on, team? It's Ricky with Tactical Solutions. I hope that you guys are all having an amazing Sunday. It is January 29th. The Federal Reserve is about to announce its interest rate hike in just 3 trading days. That's going to be on Wednesday, February 1st. We have up-and-coming earnings, big tech. We have Apple, Google, Amazon, all reporting earnings this week. This is the week to prepare. Very happy that I'm able to host this live stream with each and every single one of you. If you guys haven't done so already, I live stream here for free the earning reports. So if you've ever wanted to stay up to date, not just with economic reports for the stock market, but also earning reports, make sure you subscribe. Make sure you drop a thumbs up. I want to remind you that YouTube will not notify you if you do not turn on your post notifications. So if you guys haven't done so already, turn on those post notifications. And if you want to participate in today's live stream, all you literally have to do is subscribe, and then you can actually participate in that actual live chat. So without further ado, let me go ahead and start sharing my screen so you guys can see exactly what it is that I am looking at. And it's time to go live. So if you want me to break down your top stock, all we ask you to do is to make sure you post the actual ticker call out format in the live chat. So again, if you want me to break down your stock, post it in the live chat. If you want me to break down your stock in private, or I don't have enough time to break down your stock in this live stream, feel free to send me a direct message via Discord, and that's that first link in the description down below. There should be no excuse. If you're learning how to trade, please, I can't stress this enough, connect with me either on Discord or connect with me on Instagram. It's the first or third link down in the description. I do want to let you guys know there's a bunch of fake accounts out there. I will never ask you for money. I never ask for money. I don't trade for other people. I offer one service, and that's my Learn Plan Profit group, and that's to watch me trade live every day, and that's that second link down below. So without further ado, let's go ahead and get right to it. What do we think about Tesla? So Tesla is the first stock that is being requested for me to break down. What I want to get your guys' opinions very quickly, and you guys can participate in the live chat. Is it overbought, meaning that it's overextended, meaning that it's overpriced based off of recent patterns and most likely going to pull on back? Or is it undervalued? Do you guys think that it's going to continue to rally? So is it overbought or oversold? Is it overbought that you think that it's going to pull back, or oversold that you think that it's going to continue to rally? You guys want my opinion? Let me see first in the live chat what you guys think. I know if you're part of my Learn Plan Profit group, you guys know exactly what it is that I think about Tesla. But so not undervalued, FOMO rally. Okay, so oversold. We got overbought, majorly overbought. I like that, Samuel. We got major pullback. I like that. So overbought, too cheap, should be $500 a share. I like the way you think. It's hopeful. Oversold, overbought, wait for it to sell off a bit, overbought, oversold. Okay, so I think a lot of it has to do with your intention. If your intention is to invest long-term, I don't think Tesla long-term is overvalued at 170, right? The reason I would say that it's overbought, and again, just hear me out, is based off of where it was at the start of the month, right? January 6th. And where we're at right now, it's gained nearly, not yet, but nearly 80% in just 3 weeks of trading. So 3 trading weeks, 80%. If that isn't screaming overbought, I don't know what does, right? Obviously, right, I thought it was oversold at 101, right? So I talked about it a lot. I talked about Tesla a lot. A lot of people don't like to talk about stocks as they're very cheap and or if they're still selling off. I mean, Tesla went from $314 or $300 average all the way down to $100, right? That's a significant loss. But just seeing how overbought it is, I mean, not just with the MACD, not just with the RSI, I'm not even talking about that. I'm just talking about the recent catalyst of what has caused this stock to rally. This week will be a determining factor, right? Either this up and coming interest rate hike will shift the market or it can continue to catapult the market. But on top of that, we have the series of earning reports from Google, from Apple, some companies with the largest market cap. Three companies with $1 trillion market cap. Alphabet, which is known as Google, right? The mother company. We have Apple, and then we have Amazon, all in $1 trillion market cap. You might be talking about Shopify or something like that, but no. I'm talking about the ones with the big T, the big $1 trillion market cap. Those companies report earnings. You might be asking, Ricky, well, why does that matter? We're talking about Tesla stock. Ricky, look, you have Tesla up here. Why are you talking about 3 other companies? Who cares if they're big tech? Why does that matter? Again, for those that are, I like to really keep things simple on my channel. Google, Amazon, and Apple have a very large market cap, meaning that, for the 3 major indexes, 2 mainly, S&P 500 and NASDAQ, they're made up of different companies. NASDAQ has a big focus on tech. S&P 500 are considered to be the top 500 most valuable companies. The 3 companies that I just listed of Amazon, Google, and Apple are all part of both of them. So let me explain. Because they have such a large market cap, and because those indexes are so heavily invested in those companies, if those companies either do really good or really bad, they can drag the market with it. So let me explain. If Apple reports earnings this week and it does not meet expectation and Apple drops and Google drops and Amazon drops, it's not rocket science, right? If they have such a large market cap, they have a lot of influence to the overall markets. So therefore, if those companies drop, then the rest of the market will drop with it. Regardless if you're invested in Apple, Amazon, or Google, right? They will shift with it. And that's what I need you to understand. I respect what you're invested in. I just want you to understand the why. Of why if these companies report earnings and they move, why they will move your investments in other areas. So I just want you to understand that, right? It doesn't mean that they're going to drop. All I'm saying is if they report better than expected earnings, markets will rise even higher. If this up and coming interest rate hike is better than expected, then the markets can move even higher. So I do believe that let me explain this. I believe the markets will move higher until the start of February. And then as we start February, the market will begin to correct itself slightly. I'm hoping that the markets do not sell off back to where they were. I don't care if you're a bull. I don't care if you are a bear, right? I mean, I'm ready to short the market. If you're part of my LPP group, you know exactly what I'm talking about. We're at this resistance right here that we've not been able to surpass for quite some time. Although I'm ready to short the market, I don't want the market to actually get worse than what it's already been, right? I don't want the market to go, I don't want NASDAQ to go or QQQ to go below 253. I don't really even want it to go below 260. I don't mind it pulling on back, right? I think we all agree that for it to push this much, it's probably going to have to correct itself maybe to the EMA at 285, maybe to the moving average at 275. I don't want it to crash, right? I mean, inflation is coming down. But remember, once we have this week, then we have the up and coming, right, reporting from the Federal Reserve and how they're going to reduce the balance sheet. And that's where the unknown is. I just got a message a couple minutes ago on Instagram, and they're asking, Ricky, what do you think about the market right now? Should I go all in, or should I prepare for the market to correct itself? We're such, and I hope, again, at the end of the day, like, no one knows what's going to happen with the market, right? All I know is, I know some of you guys don't like when I draw, right? On my actual charts, but let me explain. We've been trading within this range, lows, highs. I'm not going to get too into the technical side of trading, right? Just highs, lows. It tends to find a support here, tends to bounce here, it tends to peak here. It's not rocket science, it's very simple. We are so close to this resistance that it would just make more sense to wait for confirmation. That if we do begin to trade above 300 and begin to make higher highs, then yes, I can go long once again. But we are so close to this resistance that, like, why are you being aggressive, being a bull at these levels? It just doesn't make sense. If we've gotten rejected here multiple times, what makes you think that this time it's going to be any different, right? It's like, at this point, what's your downside risk versus your upside potential? Just to be able to wait for confirmation. That's the most simple way that I can put it. It's not about predicting the future. It's about preparing for it and taking risk management into consideration. That's all, right? So if reports come in better than expected, then I could see the market continue to rally. If they do not come in better than expected, then expect a drop. Okay? So that goes hand in hand with Tesla, like we talked about. All right, let's go ahead, and that was a little bit longer of an explanation than I wanted to, but I appreciate you guys hearing me out. So hopefully I earned your thumbs up with that. But I really hope that it makes sense to you. That's the whole point we're doing this, right? Not so it overcomplicates things, but I need it to make sense to you. Airbnb with an amazing rally. So again, Airbnb reported earnings, if I'm not mistaken, from overall lows of $81.92, now trading at $116. Again, this is just my opinion. If you're in it for the long-term side of things, meaning that you don't plan to sell it anytime soon, maybe in about 5 to 10 years, yeah, sure, it's very cheap, right? Based off of previous highs. It's just about to break above the moving average. But if you look at the 1 hour time frame, you can see that all this is coming from January 6th, right? From the start of the year, it's the overall rally. I think market's going to correct itself. So therefore, if I think the market's going to correct itself and you're really trying to look for more of an effective entry, I would wait for that correction to happen first. Stop getting trigger happy, right? Especially for those long-term plays. Think about it. You have nothing but time. No one's telling you that you need to buy right now. Or no one's telling you that you need to buy right now with all of your money. This is where position size comes into play. Remember that, right? So I think Airbnb is overbought based off of recent patterns. I think it needs to correct itself. Look at that RSI, look at that MACD, just look at recent patterns. Nice little correction. Sure. At that point, kind of humbles Airbnb a little bit, comes back to more of its true value, and then it can continue to hopefully rally. So let's go ahead and move on to the next one. Let's go ahead and break down RACE. I have not broken down RACE. RACE is the ticker symbol for Ferrari. And surprisingly, if you actually look at, in comparison to a lot of different companies that are publicly traded right now, RACE, known as Ferrari, is actually doing very, very well. So I think Ferrari, as of right now, based off of recent patterns, again, if you were to look at previous highs versus overall lows, it's very overbought. It's not a good deal. Upside potential does not outweigh downside risk. I would wait for some form of correction, but I don't know if that's going to happen. RACE isn't something that experiences a lot of trading volume. It's more of like long-term investors. So therefore, again, I just don't think that it's worth it. You're kind of too late to the rally, right? When you're at 188, yeah, of course, it had a huge upside potential. But if you look at where we're at right now versus your upside potential versus 10% versus your downside risk, 30%, not really worth it. But if you're down here and again your upside potential 51% versus downside risk, again much lower. You just have to understand when you've kind of missed out of a play, right? But RACE does have up and coming earnings. I think is it this week? It's on the 2nd, so it's going to be on Thursday of this week, and it should be before the market opens. I'll have to double check. So earnings per share is 1.16 is the estimate. Ricky, can you break down what's going on, John? INTC, please. So INTC, if I'm not mistaken, INTC reported earnings last week, and it didn't do as well as expected. So 4 hour time frame, it saw a big drop. We can see that we're testing back to lows of $26.20. Again, I don't think this is rocket science. If something has been selling off for 2 years, what do you think you should do, right? There's no indication of growth. So why would you expect growth to happen all of a sudden? There's hundreds of cheap stocks out there. Cheap should not be a criteria. Opportunity or direction is. An opportunity isn't something that you should guess, but it's something that should present itself. And this isn't presenting opportunity. It's not presenting confirmation. A very simple question to always ask yourself is, if you're trying to invest in something long-term, are you missing out by not being invested? Ask yourself every single time that you're thinking of investing in something, right? Well, look at this. Are you missing out by not being invested? No, you're actually saving money by not being invested. So there's nothing wrong with paying attention to a stock that has or shows signs of potential recovery, but we have none of that right now. I mean, there's no indication of a recovery. There's consolidation, but for whatever that's worth, we set an alert, we wait for confirmation, and then, right, 2023 is not the year of being perfect. It's the year of showing signs of progress, and that's all that matters, right? Not to be perfect. You'll never be perfect, but I would rather be effective with my entries and my exits. So let's go ahead and move on to the next one. So we're going to break down Meta. What is going on, Saba? So again, if you want me to break down your stock, make sure you share it in the live chat and you smash that like button. All right. Let's see what we got here. So we got We only have 141 likes. I thought we would have had more than that. Wah. I guess you guys don't want me to continue to go live. But Meta, based off of recent patterns, again, just like the rest of the market, is performing very, very well. From overall lows of 100, now trading at 150, seeing a 50% return. I don't know how people can say that it's not overbought or overextended based off of recent patterns. But again, from overall lows of $88 to overall highs of 151, it's actually nearly doubled. But that was after its previous, if I'm not mistaken, quarterly earnings. It saw a significant drop. Now this one's about to report earnings once again, and this is going to be on the 1st of February, which is going to be Wednesday, and this should be after the market closes. So we have Meta, we have Apple, we have Amazon, and we have Google, Alphabet, mother company, right? And we're trading at 155. So if you do not think that this is a big trading week, then I don't know what is. But based off of recent patterns, I mean, a beautiful ascending uptrend pattern. I mean, this is a textbook setup of a swing trade. This is a textbook setup of, remember that same question, are you missing out by not being invested? Very simple. The answer is yes. But when is enough, right? It's pushed up enough that based off of recent patterns, knowing what's about to happen, right? You know, earnings is coming up. You know, the up and coming interest rate is coming up. You know, the Fed is about to announce its, reduction of the balance sheet. Do you think that the market will hold, right? It's one thing that I always talk about to my Learn Plan Profit group about is progression. And we're seeing beautiful progression here. But if there's no more progression or we begin to show signs of a resistance, right? Now taking a step back, I don't know if you guys can see this right here, but do you guys see this previous support range? I believe we're going to see a potential resistance right around 155. Old support levels become new resistance levels unless we exceed expectation due to earnings. That's something that I guess we'll just have to follow up with. But it's crazy how patterns tend to repeat themselves. Old support, new resistance, and we're touching that moving average. We're at a critical point for Meta, but again, we do not have that confirmation just yet, and it's overbought enough that I think that it's safe to say that it's worth maybe holding back too. So we got Ray Blackwell. What's going on, man? So I appreciate you taking time, going out of your way and actually posting this in the ticker call out format. I would love to break this down for you. And this is JWN, which is Nordstrom. So again, one of my biggest focuses is direction and asking that simple question, are you missing out by not being invested? And the simple answer for this one is, well, no, right? It is showing signs of consolidation, but it's not showing signs of confirmation. You're not missing out. It's this descending lower high, lower low. And again, you can always take a step back because it might be hard to see that when you're on the 4-hour time frame or the 1-hour time frame. And this is why for all of our Learn Plan Profit traders that are just getting started, I always talk about look at different time frames to get a better look, right? It's hard to see an island when you're in the island, but if you can actually, from a bird's eye view, see the island, then you see the bigger picture of knowing what you have to work with. And it's very easy to see this descending lower high, lower low. There's nothing wrong with setting alerts, but you're not missing out by not being invested. It's a descending pattern, so please make sure that you pay attention to that. What's going on, Joseph? So you're asking, can you do PEP, PepsiCo is the company that I work for? Of course. So I appreciate you tuning on in to the live stream. So hopefully we earn your thumbs up as well. Let's go ahead and break this one down. Damn, I love this one. Excuse my language. Sorry about that. PepsiCo is doing amazing. I mean, again, it's not rocket science, right? Look at this. If I were, let's do this. There's one or two stocks. We break down 10 stocks normally in a live stream. My goal for all of you watching this is not for you to agree that all 10 stocks are valuable. That would be a huge red flag. You should never agree with that. You should cherry pick. You should be super selective. And again, our Learn Plan Profit team hears this every day. You should be super selective, maybe one or two, if that, or maybe none, right? Because you're that selective. Don't be afraid to be selective. But this one is literally a textbook setup of an ascending uptrend pattern, right? You guys can see this even on the week chart where every candle represents 1 week. A beautiful uptrend pattern, higher highs, higher lows. And again, patterns tend to repeat themselves. They don't always have to, but from overall lows, and I can't expect this thing to offer a huge ROI, but that's 10%. 10% is still very significant for something that is that consistent. So again, it's oversold, then it becomes overbought, right? It's oversold. And what happens when it's oversold? It recovers. It makes these higher highs, right? Higher highs and higher lows. It's like this upward staircase pattern. It pushes up, it pulls back, pushes up, pulls back, pushes up, pulls back, right? So this is the ideal. This is like the 3 stages of a reversal if you're part of our Learn Plan Profit group, right? We're in the consolidation phase. So this is not confirmation. You according to the 3 stages of reversal, it's not that you should be fully invested, but either no position and or a small position, right? So then when you get confirmation of the break above the EMA or seeing higher highs, then you step on the gas. Then you actually go all in or whatever your intention is with that position. But this has to be my favorite stock that we've broken down so far. I don't know if you guys would agree, but I have to give a shout out to our boy Joseph. So I think this is a beautiful setup. All I would say is let's set that alert. Let's wait for that confirmation of that reversal. And I could see myself investing in something like this. I would consider this more of a swing trade, meaning that you're holding it for a number of days and not necessarily a day trade. This thing is not going to move that full 10% in one day normally, right? So, all right. Let's go ahead. And how many more are we going to break down? We're going to do 1, 2, 3, 4, 5, 6, 7, 8. Let's do 2 more. So again, if you want me to break down your stock, we have about 800 of you here. So again, all we literally ask you to do is smash that like button. I hope that's not too much to ask. And subscribe to the channel, especially if you want me to break down your top stock. So let's go ahead and do one more. So GIS, what's going on, Carlos? Let's see if I can break this one down. General Mills, another pretty solid setup. Look at that. Textbook setup. Wow. Okay. I'm going to start both of these. All right. Add to my watch list. And this is going to go to my oversold watch list. And this one's going to go to my oversold watch list as well. I think a lot of the people that are watching this video are going to appreciate these 2 stocks. So General Mills, obviously a huge company, very oversold based off of recent patterns. I'll have to look a little bit more into on why it so aggressively sold off, but that's a 13% ROI if it ends up recovering. Weekly chart, beautiful setup, continuous uptrend pattern. That means that ever since dating back to 2008, it's been showing signs of higher highs and higher lows. And yeah, there are times from 2017 to 2019 that it did slow down, right? But the thing is again, you want to put your money in areas that are consistently showing signs of growth. And I think that we can all agree that this is an ideal setup, right? Looking at this a little bit on the closer charts, we could see that again, it's still not showing signs of confirmation. So this is where the 3 stages of reversal comes in. Again, we talk about this in Learn Plan Profit. People like to ask, well, what's the point of learning how to trade if I can learn everything for free? Correct, you could. You can learn everything for free, but you learn it for free on your own, right? You can learn anything for free, but the idea is, can you learn it in a condensed and effective way? That's the whole point of LPP, right? Not just that you get to watch me trade live every day, not just that you get to ask me questions anytime that you need to overcome a challenge, but that you also get lectures in an effective manner, right? And again, this is where the 3 stages of reversal would come into play. So I'm going to set an alert on both sides just because we know, again, patterns tend to repeat themselves. They don't always have to. So let's go ahead and move on to the next one. So I like this video. SOXS. What's going on, RC? SOXS. Well, first off, I appreciate you dropping a thumbs up. So this one, I'm going to do another breakdown after this one. So this one I do not like because it's a consistent descending pattern, making lower lows, lower highs. Let's look at this on the day chart. No, definitely not. So again, it's just there's no indication of reversal, lower highs, lower lows. This is exactly what I would want to avoid as of right now. I get why you're paying attention to this because you're expecting the reversal to happen. But remember, like, we're trying to focus on SOXS maybe for this week. And as of right now, not only are we trading below the EMA, but we're trading below the moving average. And we've been doing that ever since the start of January. And when looking at this on the 4-hour time frame, we've been selling off ever since the peak of late last year. So it just doesn't meet my criteria. Just because it doesn't meet mine doesn't mean that it shouldn't meet yours. But just please, at least for me, I would stay away from something like this. For your boy from LPP, please go over LCID. I'd be more than happy to. So LCID. Okay, so I would be very careful on why it gapped up 43%. I really like to stay away from any company that gaps up that quickly. Do I think that Lucid could do well over a long period of time? Sure, of course. Lucid, Rivian, those are all companies that are competing with Tesla in the space, right? But when something gaps up that quickly, I just expect that quick of a correction to happen. And yeah, I mean, but everything leading up before that, right? Lower highs, lower lows. It's great that it's finally indicating signs of reversal, but I would really like to look into on what caused this thing to shift. Was it like a new acquisition? Was it a new contract, a huge contract? Did they get like some form of approval that I would have to learn more about this there has to be something significant, or is it manipulation? And even more of a reason to potentially wait for it to correct itself. So it's just something that I will have to follow up with. But I would be very, very careful anytime buying when something gaps up 43%. That's a red flag screaming of like, warning. This is bound to correct itself. Can it continue to rally before it crashes? Of course, they always do. But they always do one thing, and they always correct it themselves. So please, look a little bit more into it. And you don't always have, especially if your intention is to invest in something long term, you don't have to invest with your entire position all at once. There's nothing wrong with, even if you wanted to take a small position, at least you're managing risk by managing your position size. And again, if you struggle with that, then again, another concept that we preach every single day during our live trading session with the LPP team. So I'm going to leave it at that. If I'm not mistaken, I'm going to pop this up real quick. NASDAQ futures were down when I was looking at them, but I can't guarantee it anymore. Yep, NASDAQ futures are down 0.29%, which again doesn't mean much because the markets are not open right now. So it looks like we just rallied just a little bit. No, there it goes. So it's actually forming lower highs, lower lows. That's actually not the most encouraging view for the overall NASDAQ market. There it goes, 0.30. So that means that the NASDAQ market, if it were to open right now, TQQQ would be down about 1%. Again, that's not very significant, especially not based off of how we traded on Friday. We would pretty much be giving back everything that we gained on Friday, but that doesn't really say much. It was just a 1% day. So again, don't feel like you have to understand everything that's going on. I like to take things week by week. And remember, 2023 is not the year of perfection. It's the year of progress. And even if you were to have a break-even year, just think back to everything that you learned and how much better you understand the entire market. This week, my focus is going to be the up-and-coming Federal Reserve interest rate hike, which is going to be on Wednesday, the 1st of February, which I will be live streaming for free on this channel. So make sure you subscribe. And then we have big tech reporting earnings. On top of that, there's a series of economic reports that do move the market. But the biggest thing is going to be the market and how it reacts to this Federal Reserve interest rate hike and big tech reporting earnings. That's what I'm going to be mainly focusing my time and attention to. And that's what I'm going to be working with our LPP team on. It's just how we can better prepare for this potential shift that I see the market getting ready to form, right? But we need to wait for that confirmation first. So I really do appreciate you guys' time. I really hope that we earned a thumbs up. Most importantly, I hope that you learned something new. And if you did, hope that you can consider subscribing. Friendly reminder, again, I do work with them every single day, and that's my Learn Plan Profit group. They get to watch me trade live, access to the A to Z video lesson library designed for complete beginners. They get access to our private group chat and access to the TechBits HQ. This is the second link in the description down below. It's $150 off. It's our biggest sell. It's a one-time payment, lifetime access. And again, that's that second link in the description down below. Right now, we are running a sell where you get a free trading flag on the thank you page once you sign up. So click the second link, sign up. You can watch me trade live as soon as tomorrow. And on the thank you page, even before you head on over to the course, you can actually click this link right here and you can claim your free trading flag. It applies automatically at checkout. We take care of the rest. So friendly reminder, we are giving away an Apple Watch Ultra. And if you want to learn more about that giveaway, that's that fourth link in the description down below. I appreciate your time. You guys know how to message me. That's the first or third link. Friendly reminder, I don't use WhatsApp. I don't use Telegram. My team will never email you. I never ask for money. I only offer one thing, and that's Learn Plan Profit. And again, the second link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team. We'll see you all that are part of LPP tomorrow at Market Open for our live trading session. Take care.